Here are some quick tax tips for the novice. This video is intended for interpreting students, but really can be beneficial to anyone working at multiple job sites, receiving multiple 1099s and W-2s, and or a self-employed person. Preparing for tax time is not something that you should put off for the tax season, where you collect all your receipts and, the idea of pulling out that shoebox with all of your records. It's really something that you should be preparing for all year, especially if you have a lot of variables. You should be tracking your expenses. You should be looking at your withholdings to ensure that enough is being withheld and what is enough? Well, if you have several um, W-2s or several paycheck stubs, one of the things you could do is compare them and see, is one about the same, or is one supposed to be taking out that much? Is one not supposed to be taking any at all? You could also be contributing to retirement, which could potentially be a credit you could take later to reduce your tax liability, and or you may be needing to make estimated tax payments. So we can see that there's a lot of things happening during the year that are part of preparing your taxes. So really preparing for tax time is something that's you will be doing constantly. Now, I should have started this video saying that this is not tax advice. And the reason for that is because everyone's situation is different and unique. You may have dependents, you may have someone who claims you as their dependent, you may have 2 jobs or 3 jobs, or maybe mostly do freelance and do a little bit of this, a little bit of that. And so, because everyone's situation is different, this video is really intended as general concepts for you to keep in mind as you go about your interpreting or your multiple job life. So for this slide, on a W-2 job, you should only claim yourself once. So that means if you're working at 3 campuses, only one of those campuses, and I would select the one in which you're earning the most, should be the one where you claim yourself. And the other two, if we're using the old form, should be a 0. And in my scenario, we're only talking about yourself. So again, I don't know if you're someone's dependent or if you have dependents, but with the idea of just one person, you should only claim yourself once at one job, because essentially, when you put those jobs together, you will have claimed yourself 3 times, and it's actually the most common way that I see in my practice people owing. So if you see my example on the screen, imagine you have 3 W-2 jobs. One was just a couple days, you made $500. Maybe they didn't withhold any taxes. Second one, it's kind of your main source of income and you earn 23,000. And then there's a third where you kind of gave them as much time, or maybe you only were there a short time in the year, but you still made $15,000. Well, in this example, each job is withholding the tax amount for the amount year to date of what you've earned there. And so they're not necessarily familiar with each other. They don't know that you're earning other money or that you even have freelance work. So a lot of times there's a misconception that jobs talk to each other from the accounting perspective. They don't. So what happens when you file your taxes? The line 1 of your 1040 says 38,500, and that's the true amount that you're paying taxes on. This is, of course, before all the deductions and credits, but this is the true amount versus what each of these jobs was withholding. And so it's really important that you look at your withholdings and ensure that you are increasing if you need to, or decreasing if you're having too much being withheld. We know that it takes money to make money, so you have to track your expenses. Now, with the Trump tax law changes that happened, if you have a W-2 job, you're no longer able to deduct expenses. You may be able to in the state return, but it really has to be a significant amount for it to be helpful. Check with your tax person on that. But what this really is focusing on is for that 1099 work that you're doing, the independent contractor, freelancer work that you're doing. It costs money to drive, costs money to park, it costs money to maintain your certification, to do your continuing education. It costs money to make money, and so those are the things that you should be tracking. Your tax return, tax liability will be as good as the work you've done during the year to track your expenses. And your tax preparer can help you as much as they can with the good stuff you give them. So if you don't give them good numbers, then they have nowhere to pull them from. So think about it this way. If you have to spend money on something in order to stay in business, in order to stay working, then it's probably deductible. And so those are the things like I mentioned earlier, but things like office supplies, even a mobile phone. Is that where agencies reach you? Is that where your job reaches you? Those are the things you have to consider. Now, one of those things that you should be tracking as well is your mileage, especially if you're driving from assignment to assignment, uh, doing your 1099 independent contractor work, and potentially if you're going from a W-2 job to a 1099 job. But in order to claim your business miles, you must track all of your miles. And what that means is the following. This is the information that you need in order to claim those business miles, which is the year, make, and model of your car, the date placed in service, your total business miles, which is essentially that 1099 independent contractor work, your total commute miles, which is essentially the W-2 work, and your total personal miles, which is everything else. Now, in the everything else, there is a separate category where you can track medical miles, but I'm not including that for the purposes of this video. If in the previous tax year you owed $1,000 or more, or if you expect to owe more than $1,000 for this tax year, then you must make estimated tax payments. Now, how do you expect to know if you're going to owe? Well, you can use last year's amount if you didn't make any adjustments to your withholdings or any additional changes, and expect to owe about the same because you earned the same. That's one way. But the other thing is to look at your income. That's why you should look at your withholdings on your paycheck. Occasionally, it doesn't hurt to look at the amount withheld, but also look at the amount of untaxed income that you're receiving. And what I mean by that is not that it's not taxable, it's that no tax is being withheld, which is things like that self-employment work, 1099 work. And if you do make estimated tax payments, these are the dates that they're due, with the last payment due January 15th of the following year. But something to consider is that you have multiple job sites where you're getting taxes withheld, and maybe you're doing just a little bit of freelancing. You can use your W-2 withholdings to adjust for that. So you don't necessarily have to always make those estimated tax payments. You can actually do other things during the year, like adjusting your withholdings. You can always have an additional amount withheld. You can also track your expenses more carefully in order to reduce that. And you are really the only person that will ever really know the changes happening in your income. And so you have to keep an eye out for, should I be paying into estimated tax payments? Should I be adjusting my withholding? Hey, is this pinching a little bit? Maybe I want to adjust it the other way so that I get more on my paycheck, things like that. If you are a self-employed person, which includes being a freelancer, any kind of 1099 work, then you must have a business license for the city in which you live or in which you operate. This is here because you can avoid being taxed by the city simply by renewing your business tax permit on time. Because often, under certain income or gross receipts amount, it could be free. So some people think, I don't need a business permit, I'm not going to do it, and they never get caught. But other people, 2, 3 years, 5 years, whenever it is, down the line, they get a letter that says, hey, we've received all these reports of these 1099s and now we're going to tax you. And it could be 1% of the gross receipts or whatever the typical tax for that city is. Whereas if you had, or that person had renewed their business tax permit on time, it might have been free. If the renewal is late or if the city has to um, send you a letter and charge you, then the tax is owed. Everyone pays tax. If you're making a living, earning a good income, sometimes not a good one, a low income, people still have to pay tax. So don't be fooled by people saying they don't pay, they got all their money back, they only owed $800 because we simply don't know their situation. There's probably something else happening, and you just want to focus on your own tax situation. What you can do instead is be aggressive, using your expenses, using retirement contributions, making sure you get your deductions and your credits to make the numbers work for you. Nobody wants to think it, but the truth is that if you pay tax, it means you made money, and that means you're in a pretty good position. Now, it doesn't mean that you don't have to be aggressive or really assertive with decreasing your tax liability. It just means that everybody has to pay their part, and if you do, it means you're doing pretty all right. So do a quick check-in. Are you ready for tax time? Have you received all of the forms that you're expecting? It really ends up costing you time and money if you file your tax return too early before receiving all the forms you expect to receive, or if you don't receive them and receive a form after you have filed, because then you have to amend your tax return. And amending your tax return, while it's something you can do, you don't want to do it too often because you don't want to get flagged for an audit in any case. Staying off the radar is pretty good to me. So, have you received all the tax forms you're expecting? Have you reviewed any 1099s for accuracy? I have myself received an incorrect 1099, which was incorrect against my favor because it was reporting more than I had actually earned for this agency, and I wanted to make sure that I corrected that. That's an important reason to track your income, if not because you're in business for yourself. Have you totaled all of your expenses? It's easier if you're keeping track of your expenses throughout the year than to total them at the end of the year because some items may require additional information, like laptops, computers, office furniture, especially now that we're working remotely. These things may require additional information like a description and a date of purchase. Check with your tax preparer in order to do that and to see if the expense that you're thinking is one of those that needs that description. So it's a good idea to develop a system to track your expenses, and you could do something simple like Excel if you're a small operation, or you could do the shoebox method, but I suggest adding some envelopes with categories to that, as you can do like a meals envelope, parking envelope, professional workshops and memberships envelope, and then you can stick your receipts like that. Definitely any way that you feel is the best for you to track your expenses. is going to be the best way to do it. As long as you get to those end totals,